Have you ever wondered how shifts in builder sentiment can impact the multifamily housing market? Welcome to the Multifamily Real Estate Insights podcast. I'm your host, Sandy MacKay. Let's get right to it. In early 2025, confidence in the United States multifamily housing market experienced a decline, according to the latest multifamily market survey released by the National Association of Home Builders. This survey, which tracks builder sentiment and occupancy levels, showed a year-over-year decline, signaling a more cautious approach among developers as they face economic and regulatory pressures. The Multifamily Production Index, a key indicator of builder and developer sentiment about current production conditions, dropped 3 points to a reading of 44. This reading indicates that more respondents view conditions as poor rather than good, with a score below 50 reflecting overall pessimism in the market. The Multifamily Production Index is a weighted average of 4 market segments. Garden and low-rise units dipped slightly to 54, while mid and high-rise units saw a sharp decline of 8 points to 28. Subsidized units held steady at 50, and built-for-sale condominiums edged down 1 point to 38. Meanwhile, the Multifamily Occupancy Index, which assesses perceptions of current occupancy rates, registered a strong 82, only down by 1 point from the same period last year. This indicates favorable occupancy conditions, with the components showing resilience. Garden and low-rise occupancy slipped 2 points to 82. Mid and high-rise occupancy rose 2 points to 76, and subsidized unit occupancy fell 5 points but remained high at 89. According to Deborah Guerrero, chairman of NAHB's Multifamily Council, while occupancy in existing buildings remains strong, developers are cautious about starting new projects, especially mid and high-rise as well as condominium projects. The main challenges include construction costs, regulatory barriers, and financing difficulties, compounded by uncertainty surrounding tariffs. NAHB chief economist Robert Dietz added that the Multifamily Production Index of 44 supports their forecast for a modest slowdown in multifamily construction through the rest of 2025, with a possible rebound in 2026. Rising costs and economic policy uncertainty are weighing on the market, with more than half of developers surveyed reporting supplier price hikes related to current or anticipated tariffs. The Multifamily Market Survey was redesigned in 2023 to align more closely with other industry sentiment indices. As the new series builds historical depth, year-over-year trends should be considered until seasonal adjustments become statistically viable. This redesign aims to provide more accurate insights into the multifamily market's dynamics. Institutional Property Advisors, a division of Marcus & Millichap, recently announced the sale of One Dekalb, a boutique multifamily property located in White Plains, New York. This asset, which traded for $31.5 million or $414,474 per unit, is fully leased and situated in the highly desirable downtown White Plains submarket. This area offers residents a high quality of life, walkability, and direct proximity to New York City. Eric Pentore, Vice President of Institutional Property Advisors, emphasized One Dekalb's prime location and modern amenities, which include a rooftop terrace, resident lounges, and co-working spaces. The apartments themselves boast keyless entry systems, open floor plans, full-size washers and dryers, and oversized windows. These features likely contributed to the property's appeal and successful transaction. The transaction was handled by Eric Pentore, along with team members Victor Noletti, Wes Klockner, and Ross Friedel. The team represented the seller and procured the buyer, Benchmark Real Estate Group, in association with John Horowitz, Marcus & Millichap's broker of record in New York. This sale underscores the continued demand for well-located multifamily assets, even in the face of broader economic challenges. Marcus & Millichap, a leading national brokerage firm, specializes in commercial real estate investment sales, financing, research, and advisory services. With over 80 offices and 1,783 investment sales and financing professionals, The company closed 7,546 transactions in 2023, with a sales volume of approximately $43.6 billion. Their expertise and extensive network undoubtedly played a key role in facilitating this transaction. Let's dive into some recent developments in the real estate sector. According to CoStar News, Transwestern Development Company is expanding its logistics group with the appointment of Carl DeLuca as managing partner. Carl DeLuca, a 20-year industry veteran, will be based in Houston and is set to oversee the firm's industrial development pipeline, as well as manage regional teams across several key logistics regions in the United States. DeLuca's previous experience includes leading real estate development and investment for the Americas at DHL Supply Chain and senior roles at Duke Realty. This move comes as John Thomas retires after 7 years in the logistics leadership role. Transwestern is known for its comprehensive real estate services, with divisions that include development, real estate services, and investment management. Developer Ryan Companies has made significant leadership changes in two major U.S. business regions. Patrick Chesser has been appointed as Southeast Regional President, taking over from Doug Deek, who is retiring. Chesser, a 30-year industry veteran, will lead operations in Georgia, Florida, Tennessee, and the Carolinas from Atlanta. His experience spans roles at Mill Creek, South City Partners, and Ackerman & Co. Meanwhile, in the North region, Maureen Michalski and Jason Gabrick have been promoted to co-leaders of the Minneapolis-based office. Michalski and Gabrick have been with Ryan Companies for several years, and their new roles will involve leading mixed-use and specialty developments as well as construction and business development. On the multifamily front, Portman Holdings is pursuing new projects in Texas with the hiring of Katie Tolson as Vice President of Development. Tolson, who will be based in Austin, Texas, brings 18 years of industry experience, having handled land development, entitlements, and construction management for projects throughout Texas and Colorado. Portman Holdings, headquartered in Atlanta, has 28 multifamily and mixed-use projects across 9 U.S. regions, underscoring its commitment to expanding its footprint in the multifamily sector. These strategic appointments and expansions highlight the ongoing dynamism and growth potential in the real estate market, particularly in the multifamily and logistics sectors. It's encouraging to see firms like Transwestern, Ryan Companies, and Portman Holdings adapt and expand in response to market demands. As always, we'll continue to monitor these developments and bring you the latest insights on how they might impact the multifamily landscape here in Canada and beyond. Thank you for listening to the Multifamily Real Estate Insights podcast. I'm your host, Sandy MacKay. See you on the next one.